this ICT high rate strategy actually make me consistently profitable. What's up with you guys? It's your boy Kings right here again. You're welcome to another day with an ICT Forex trader. Okay, my name is Kingsley. I'm a Forex trader. I trade ICT concept and I share Forex educational knowledge on this YouTube channel based on ICT concept and other psychology tips on how to become a consistently profitable trader. Okay, so I also document my trade here. So if you are new to this channel, do well to subscribe. Okay, do that. Like, do not take your time. Just few seconds, just subscribe and also like, turn on the notification bell so that you'll be notified every time I post on this YouTube channel. So if you're new, you're welcome. For those sharing my content, for those liking, for those that have been following, for the new subscribers, you are welcome to this new YouTube channel. Okay, I love you guys. I really appreciate it. Alright, I will be sharing with you ICT high rate strategy that changed my trading game, right? This ICT high rate strategy actually make me consistently profitable. Okay, I know that a lot of newbies in this space, those that are the developing traders, they are struggling how to get a strategy that is profitable or that are consistently profitable over time. But here I am to teach you guys for free a consistently profitable trader that has up to from 60 to 90% win rate, and that's the strategy that actually made me consistently profitable. Okay, this strategy is very simple. Okay, it is based on ICT 2022 model. Okay, but I'm going to simplify it such a way that even a year-old can actually understand this. Yes, like I'm going to simplify it, right? So just stay with me to the end of this video. You are going to learn a lot. You can learn this simple strategy, then you go and backtest, validate this strategy, and see that it actually has a high win rate. So it's very simple, and you can actually apply it no matter any kind of trader you are. Okay, so this strategy actually appears in the chart every single day. It appears almost every single day. Okay, but mostly I use it to trade Euro USD. Okay, I just trade only one single pair. Okay, and despite that I also catch at least every single day. It forms at least 1 or 2 times. You understand? So it's a very simple strategy, right? So I'm going to simplify it. I'll show you all the requirements, all the things you need for you to start trading like a pro. You can become this may be the strategy you need, right? It may be the only strategy you need to become a consistently profitable trader. Okay, just once you learn, then go to your chart, backtest, and actually find out for yourself if this strategy is actually profitable. Okay, don't just take my word for it. Just study after watching this video, then go to the chart and validate the strategy for yourself. Okay, now so I'll be taking you to the chart, right, as I outline all the elements of the trade setup and how you can actually apply this strategy and make the most out of it. Okay, so let's go to the chart, guys.
All right, guys, yeah, welcome back to the chart, right? So now, just as I said, I'm going to be sharing with you an ICT high probability setup. Okay, so this may be the strategy that you need to become a consistently profitable trader. Okay, so once I teach you, please do well to go and backtest it. Okay, don't take my word for it. Make sure you backtest. And know how this works, right? Know if it works for you. Understand? Personally, I only trade Euro USD. Okay, I trade Euro USD with this strategy. Okay, and it's like the setup appears almost every single day, right? So there is no need of me trading another pair. Okay, I have to stick to one pair and only this strategy. Okay, and it's going to be a game changer for you, right? So now I'm going to be showing you what are the elements of the trade setup. This setup is very simple. I'm going to simplify so that you'll be able to understand. So the first element of the trade setup is time. Okay, so you need to consider time. Now your time should be in New York time. Okay, go to your trading view and set your time to New York time. Okay, you can see if you're using a PC, come here, go to your time. Okay, make sure that it is in New York time. Okay, New York time. Or even if you're using your phone, go to setting and change the time, right? That is, I think, under events. Is it event? What can I see? I don't even know where. Okay, let me check, guys. Let me check where you can see your time. And okay, this is it. Under symbol, you can see time zone. Okay, make sure that your time zone is in New York. So once your time zone is already in New York, that is in EST. Okay, then once it is in this New York time, then you are good to go. Now, when will you be looking out for this setup? You'll be looking out for this setup when it's at the first that is we have the morning section, we have the afternoon section. Okay, we have the morning section, we have the afternoon section. Or is it afternoon? Okay, not afternoon, but we have our London Q zone and New York Q zone section. Okay, so we have London Q zone, we have New York Q zone. You understand? So the London Q zone, that is the London section trading this thing, when you look out for this setup, is at 2 a.m. to 5 a.m. EST. That is the New York time. So once for you to trade this setup, once it's the London Q zone, you wait till 2 a.m. New York time. Okay, 2 a.m. New York time, then you mark it out. Right, it's very, very simple, just like we have here. So once it is 2 a.m., you can see this is the London Q zone. I marked it out. I marked my London. I use this vertical line to mark it out. So simply go to your this thing and put the vertical line. Okay, London Q zone at exactly. If you check now, you can see it is exactly at 2 a.m. EST. So that's the first thing. Now you are going to be looking for this setup within 2 a.m. to 5 a.m. EST. 5 a.m. Okay, guys, you put this at 5 a.m. So this is where you'll be looking at for the setup. You can see this is the London Q, the morning, like the London Q zone setup. So you're looking for this setup in the morning. This is where you're looking at. So this is the first duration. Okay, London Q zone. Okay, let me write London Q zone. So you put it at the top. Okay, so this is when you'll be looking out for in the first section, which is the London Q zone section. Now for New York Q zone, okay, let's assume that you didn't find any setup in the London Q zone. You can also wait for New York Q zone so that you will engage. And the time you look out for in New York Q zone is from 7 a.m. So we put this in 7 a.m. We put 7 a.m. Okay, this is in 3 minutes. It's from 7 a.m. to 7 a.m. So from 7 a.m. to 10 a.m. right? So that is your New York Q zone. So you mark it out 7 a.m. to listen. So this is the New York Q zone. This is the second time we're looking out for it. Okay. So you mark the New York Q zone. NYKZ. So that's New York Q zone. That's the short form. Okay. So if you know now, this is the two basic ICT Q zones, right? Where we have high volatility in currency pairs. Okay. So now this is the zones you'll be looking out for this time. Okay. So you must want time is a factor. Time is a factor. Okay. So you'll be only be looking out for the setup in these Q zones, that is this time intervals. Okay, please, does it mean that setup will not form outside this time? It can form. Okay, but it is not high probability. Okay, so it's best you always wait for this time for you to trade this setup. Okay, so you can find it within this time range whenever it forms, and that all the criteria are met, then you can execute. You understand? Or if you didn't see it a London Q zone, you wait for New York Q zone, then you look out for it, and you are good to go. So that is the first thing you need to consider. You need to consider time as a factor. Okay, so very, very important. If you're an ICT student, you should understand this, that time is a very good factor when you're trading an ICT strategy. Okay, so London Q zone and New York Q zone. London Q zone is from 2 a.m. to 5 a.m. EST. New York Q zone is from 7 a.m. to 10 a.m. So the second thing you are going to look out for is, once you have marked out your time, the next thing is to wait. Okay, the next thing is to wait for time, right? The next thing is to do what? Is to wait for this time to open, like price to get to that time. Okay, so you wait for price to get to that time. So once price get to that time, now you should be waiting for, like, once price get to it, then you go to 15-minute time frame. Okay, go to 15-minute time frame, right? So once you are in 15-minute time frame, this should be the first time frame we're going to be looking out for. Okay, it should be the first time frame that you're going to be looking out for. So what will you be looking at in this time frame now? What will you be looking at in this time frame? What you'll be looking at in this time frame is, you'll be waiting for a swing point to be taken. Okay, so number one, once the price open at the first open, then the first candlestick that forms when time is 2 a.m., you wait, right? for a swing point to be taken in 15 minutes, right? A swing point to be taken in 15 minutes, there is a low, right, or a high to be taken. Anyone that is taken first, okay, you can see price open and it expanded to the downside to take out this low. You can see this low here that gave this high, so it took out this low. Okay, so you must always wait for a low or a high to be taken. Anyone that is taken first, okay, that's the first thing. So you call it stop purge. In the ICT, you call it stop purge. That's why I put SP, stop and purge. STOP and PURGE. Okay, stop purge. Okay, so once a stop is purged, that is because there are sets of stops resting below here. So once it is taken, the swing low is taken, right? Then what do you need to do? You then go to the entry time frame. Okay, so the second criteria is wait for the time, that is your trading time. Wait for your trading time. Once your trade time is have reached, then you go to 15 minutes. You'll be waiting for a swing point that is a high or a low to be taken. Okay, you're waiting because once price opens, okay, that is the once the Q zone opens, do you understand? Price used to move in opposite direction of the its anticipated direction. For example, if price wants to go to the upside, okay, and it opened, price used to go in opposite direction before it then reverse to your target. Okay, so once it went to opposite direction, the target used to be to take out what a swing low or a swing high. So once that swing low is taken, then it must be in 15 minutes, please. Very, very important. It must be in 15 minutes. So once, or you can also see it in 5 minutes, anyone. Okay, then once it is taken, then you then go to the entry time frame. Okay, so the second criteria is wait for a swing high or swing low to be taken. Now the question is, what if, for example, this low was taken and the strategy didn't form? Then you will wait for another one to be taken. Okay, so once it is low that is taken first, okay, and let me say the strategy didn't form in this one, then you wait for this one to be taken. Okay, so if this one is taken and the strategy form, then you can still enter. But what if it takes this one, it didn't happen? Then you wait for this one to be taken. Do you understand? So any low that you saw that the strategy, that is once it is low that is first taken, then any other low that is taken, and that is where the strategy forms, that is your entry. Okay, and it must be in 15 minutes time frame. It must be a 15 minutes low or a high. So if it is a high that was, let's assume that price opened and created this low and it didn't take out this low and expanded to take this high, then you should be looking at your strategy from this side. Okay, right? So that is it. So the same thing, you can see New York, the same thing happened here. So you can see price opened, then went to the upside. There, it wanted to take out this high, but it didn't take out this high. Then it came back to take out this low. So the swing point that was taken first, or the swing point that is taken first, was a swing low. So because price didn't take, had it been price take out this high, and you'll be looking for a sell. But price first went for the sells after going up. So it just reached at this other block and reversed to take out a sell stop. Okay, so once a swing low is taken, then you go down to your entry time frame and look for entry and enter. Okay, but make sure that a swing point is taken. If it is a swing low that is taken first, then your execution will be buy. If a swing high is taken first, then execution should be what? Sell. Okay, so that means when you are buying, you'll be expecting a swing low to be taken. Okay, if you're selling, you're expecting a swing high to be taken, right? In form of manipulation. Okay, this thing is in form of manipulation, right? So that is it. So once a swing point is taken, you take note of it and do what? Go to your entry time frame. Your entry time frame, that is the third criteria now. So first one is take note of the time. You must be trading London Q zone or New York Q zone. So the London Q zone 2 a.m. to 5 a.m. New York Q zone is 7 a.m. to 10 a.m. Second one, wait for a swing point to be taken. First stop purge in 15 minutes. Stop purge, that is a swing high or swing low. That's a high or low. If it is the one that is taken first, that's the way you target. Because once price opens, it tends to move in opposite direction to the anticipated direction before it will expand. Just as you have here, price opened and it moved in opposite direction, then expand to take out this high. Okay, so that should be your target before this news, this thing drive. So that's it. So the same thing happened in this one. It's actually moving in opposite direction, but it didn't take out any liquidity. Okay, it didn't take out any liquidity. You call it liquidity, right? So no liquidity was taken, right? And price went back to take out this liquidity in form of low. So once it takes it out, then this is the first low, this thing swing point that is taken. So this is where your entry should be, and you take it to the upside. Okay. So that is it, guys. That's the condition on 15 minutes. So once a stopwatch happens in 15 minutes, now what will you be looking out for? Then you first go your entry. Now where you should be taking your entry is either in 1 minute, 2 minutes, 3 minutes, or 5 minutes. Okay, but most times what I use is 1 minute, 3 minutes, and 5 minutes. As you can see here, mostly I use 1 minute, 3 minutes, and what 5 minutes. So why am I using this? It means if I see an entry in 1 minute and it's not clear, I'll go to 3 minutes to look for clearer entry. Now, what is the entry? What you should be looking out for in the entry is once a stopwatch is happens, once a stopwatch, let's say this is a stopwatch in 15 minutes. Okay, let's say this is a low. Okay, price take out a stop. This is a stopwatch in 15 minutes. Okay, SP in 15 minutes. So after an SP in 15 minutes, what you're waiting for is you go to lower time frame. This is the pattern you'll be looking out for. You're looking out for price to do something like this. So take out a low, then a quick shift in market structure. A quick shift in market structure. Now, once there's a quick shift in market structure, taking out a swing high, that is in the entry time frame. Then you'll be looking out at this leg. At this leg now, you should be looking for a gap in price. You should be looking out for a gap in price. If there is any gap, that is your entry. If there is no gap, no entry for you. Okay, gap considered is what that validates an entry. So once there is gap, you wait for price to return into that gap. Then the opening of that gap will be an entry. Then you target the subsequent highs. Okay, so that's what you'll be looking out for. This is the first model you'll be looking out for. Okay, this is the first model that you'll be looking out for. This is the first model you'll be looking out for whenever you're looking for a buy. Okay, so now this is it, guys. So this is the first strategy. So you'll be seeing something like this, a stopwatch taking out this. So you call this market structure shift. You call it market structure shift, MSS. Okay, so that's what I wrote here. I said go to market structure shift and return to FVG in 1 hour to in 1 minute to 5 minutes here for entry. Okay, so market structure shift is after a 15-minute stopwatch, price expanded to the upside, taking a swing high, then return, created a gap here and return. So the gap should be within this leg. Okay, so the gap should be something here. Okay, and that would be your entry. So you enter immediately at that point. Okay, and where should be your low? You put your low beneath this. Now, this is how you do your low now. If your low, you can see here now, the low is 8 pips from the open of this gap. So the low is 8 pips. You add extra 1 pip. So what do you have here? 8.4 pips. So you make it 9.4 pips. You add buffer because at times there may be manipulation so that it will not affect you. So even if it affects you, know that that setup is invalidated. Then you can see the target. What is their target? Target at least only what you should be targeting the 1:3 area in average. So mostly what I used to target is 1:3.3 area because of spread and all this stuff. So that once the thing completes, it will give me a complete money. Okay. So that if I'm risking $100, I'm targeting to make $300. If I'm risking $1,000, I'm targeting to make $2,000. Sorry, if I'm taking $1,000, risking $1,000, I'm targeting to make $3,000. That is times 3 of my risk. Okay, that's what it means. So that's it. And you look out for the recent high there that actually equal to 1:3 R. That should be your target. So price will expand and take out that distance, then close. That's your entry. So another form of entry that you'll be looking out for, okay, is I'll be showing you guys. Okay, I'll give you guys the templates now on the screen. So I'll be showing you the 4 major templates. We have 2 buy templates and 2 sell templates. Okay, I'm going to be displaying on the screen right here now. Okay. So these are the major templates, which I have mentioned. I think this is the number 1 here, which I have showed you guys already on the chart. Okay, so the other templates are the subsequent ones for both the buy and the sell model. Okay, so that's what you'll be looking out for. Now I'll be taking you to the chart so that you'll be seeing these things live. So I'll be taking you to the chart so that you see these things live. So now this is today. Let's use today as yesterday as an example. Yesterday was Wednesday. Yesterday setup. Okay. So once let's use the London Q zone. This was the London Q zone. Let me delete this. This was the London Q zone. And price, first thing first, what happens? Let me delete this. So price opened. So price open here, it's open at this point. Once the key zone opens, so price expanded to the downside and take out this swing low. So once this swing low is taken, that means that's where I'll be looking out for my entry, is it not? So I'll be looking down for my entry at this stopwatch. Okay, now we're going to, I will first go to 1 minute time frame. I'm telling you guys how the live application on how I do this live. Okay, this is the model I trade personally. This is the model I trade. Okay, so this is the model I trade. I'm not teaching you any textbook setup, right? Okay, I love you guys so much. That's why I have to share it with you all. Now, look at it now. Okay, I'm going to be using this so that you'll be seeing the setup here. Here now, this is, and a good thing about this actually taught us why you should be using that buffer that I told you guys. So look at this setup now. You see that it must correspond with one of the templates. Okay, so you can see what you have here. You can see this high. So it went down. It went down like this. Then went up, take out this high. So what is it? Stopwatch. Now, once there is stopwatch, you look out. Is there any gap right there? If there is no gap, there is no setup. Okay. So if there is gap, if there is no gap, then I'll go to 3 minutes to know whether if the same setup forms. If it is not in 3 minutes, I'll go to 5 minutes. But if I need to see it again, then I will leave it to go. Okay. So that there is a gap there. Okay. Then that should be an entry. Then you'll be targeting at least 1:3R. So this is my entry. Let me remove this. So let me remove this. So this is my entry right here. So FVG 1 minute. So I'll write it there. So that's my entry. So I'll put my entry here. So once price get back to it, I will enter. Okay, then I put my entry there, and I'll put my stop loss below. So I will add extra 1 pips. So the stop loss is 1.5. So I'll increase it to 2.5 pips. So don't mind the stop loss. The main thing is you're trading in percentage. Okay. So what is your target? Your target is high here. Okay. Provided to give you 1:3R. You target the high here, then you give us 1:3.7R. Okay, that means if you are risking $1,000, it's giving you what, $3,700. So this is a beautiful setup. You see that price actually went up and tried to manipulate to take off us out because of this buffer. We are safe. Okay, so this is the best way you can actually trade this setup. So this is a first example. Let me show you another example again yesterday that this is a trade that was executed. All right, so now let me take you again to that setup. Okay, so I'll be giving you 2 examples and also the trade I took today, but today's one was the hit stop loss. All right, to tell you that there is no holy grail strategy here. So right, so the main thing is provided you have high win rate, you will still be profitable. Right, I've taught you guys in the previous video when I talked about the risk management, how you can stay consistently profitable even when you have winning there's a 50% win rate strategy. Okay, but this strategy is more than 50% win rate. Now what do you have here? This is in the afternoon. So price first went to the Q zone open, price went up. Okay, it first went up, right? So when it went up and any swing point, no swing point was taken, and price returned into here. It actually returned here. So once it's returning here, then what do you look out for? You look out for an entry, is it not? So you look out for an entry because this is the first swing low that was taken. The swing high wasn't taken, but price returned to take out the swing low. So that's where you look out for your entry. Now you go down to 1 minute time frame to see if we have an entry in 1 minute time frame. If you have an entry, we execute. But if you don't have an entry, we will go to 3 minutes to see if an entry will form. Then what is the entry template? You already know. It's very, very simple, guys. So there must be a break in market structure, right? So the market structure shift to the upside. Okay, after the stopwatch in the lower time frame. So after the 15-minute stopwatch, there is an expansion to the upside. So you can see this was 3 minutes, but the 3 minutes, this was 1 minute. The 1 minute was rough. It was not so clean for me. So I went to 3 minutes to see if 3 minutes entry was actually clean. Okay, but I went to 3 minutes and it was clean. It was very, very clean entry, and we'll have it there. So what is the entry? You can see it here. A quick expansion creating what market structure shift, return to FVG, and price expand to the upside. So as simple as that. So once you mark it, you can see mark your entry. So you mark your entry right here. That is there a gap? All this market structure shift, is there any gap? Yes, there is a gap. And once there is a gap, then just quickly wait for price to return into that gap. Okay, I'll put my price at the open. So if you put the stop rate is 4.6, so you expand it to 5.6 because of manipulation. So do you see how we wasn't stopped out because of this? We are playing with cushion and we are safe. Okay, so that's it. We weren't stopped out and price deliver. What should be your first target? Your first target should be this high, but it is just 1:2R. So you look out for another high. So that's where your target should be, at least 1:3R. and it's giving us 1 is to 3.2R. And price expanded, delivered beautifully well. Okay, and here we have another setup today. It is also a buy setup, right? As we waited for London Key Zone to open. As always, first of all, you must wait till the time before you start looking for your entry. 15-minute stopwatch, then you go to your entry time frame, look out for the signature in price, and you execute. If it is not there, no execution. As simple as that. So this morning, which is this thing, so here in 15 minutes, we waited for London Key Zone to open. You can see this line 2 o'clock. Okay, I marked it out. So price opened, expanded to the downside, take out this low, and also take this one out. Okay, it took out this low, no entry formed, then it went down to take out this one, and an entry formed. Right, if you go to 1 minute time frame, we first go to 1 minute time frame to see if there is an entry. So I will show you the entry I used. Okay, so there was a clean entry in 1 minute. Let me delete this so that. So there was a clean entry in 1 minute. Okay, so it expanded to the upside. I will show you guys. So it was a clean entry. Though it gave us first entry, which is the second template, buy template, is a second buy template. All right, but I didn't take that one, right? Because I know that price may expand to the downside, which is this one. Let me show you this one. So you can see it's price returned, then expanded to the upside, right? Expanded to the upside. Is there a gap right there? Yes, because there is market structure shift there. You return there and it expanded to the upside. So that's the first entry my price gave us. Okay, that's the first entry. Is there market structure shift? Yes, there's a market structure shift here. So that's the first question you ask yourself. Is there market structure? After the stop, is there market structure shift? Yes, there is market structure shift. After the market structure shift, the leg that created the market structure shift, is there a gap? Yes, there is an FVG. So you mark it there. So FVG in 1 minute, right? FVG in 1 minute. So after the FVG, is there an entry? Yes, your entry will be here. You expect price to return into it. So you put your stop loss here, 2 pips, right? You add extra 1 pip to watch. 3 pips, beautiful. So you see, after this manipulation, we are not caught. Okay, so that's how you stay ahead, guys. So what should be your target? You'll be targeting here. This is 2.4 pips. All right, then you target this. So you don't check the pip because some people will think that pips is how you make money. No, don't make money because of the pip. Okay, so remember our target is always 1 is to 3 pips. So this is another reason why you should always go for 1 is to 3 pips. Okay, so you can see it's delivered beautifully well. It delivered beautifully well. That is 1 is to 3.3R. Okay, it delivered beautifully well. Then price refers to hit our stop loss. But why my own? I didn't take this first entry, so I didn't take this first entry. That's why I couldn't catch the trade. I didn't take the first entry, guys. I didn't take the first entry. So the one I took was after this manipulation. Okay, price went up. Create another what? Create a market structure shift. Okay, you can see this is another model right here. Market structure shift. Is there a gap? Yes, there's a gap. And price expanded to the upside, but it didn't reach my target. It just gave me 1 is to 2R. It didn't give this. It didn't give me my clean entry. That's FVG 1 minute. So it didn't give me my complete distance. So that's why I could reverse and hit stop loss. And it is normal. It's normal. I know. So most of the newbies will be panicking. You don't need to panic, guys, because I know how much I'm risking already and I've accepted the loss. So what do you have here? 3.5. So I'll make it 4.5. So I'll make it 4.5. So right there. So now what is my target? I'll be targeting a high. Okay, that will give me 1 is to 3R. So you can see it just gave me 1 is to 2R, just 1 is to 2R. You can see, and it reversed to hit my stop loss. So it is normal. Next day we go again, right? So my target was price to return into this high. Just 1 is to 3R. That's what I need. I'm expecting price to return into this FVG. My target was this high, but I don't want it to get to that high. Just what I need is 1 is to 3R. Okay, so that's how I trade. Okay, I always have my target. So and price went up and then reverse fell to then come and take me out. It took me out on this place. I said that's beautiful. Next day we'll go again. Okay, so that is it. But you see this setup is formed decently well. So I'll be giving you the last example, which is a sell setup. Okay, so let's check previous day's trades. So let's look at previous day trades. Okay, day's trades. Let's look at this one here. This was a sell. So this was on Tuesday. This was on Tuesday setup. This was Tuesday setup right here. So what do you have, guys? What we have now is we wait for what London Cuson to open. What London Cuson open, and you can see price expanded. Where is the first upward that's taken? The first swing high that's taken is what, a high. So that is our what stopwatch. Now go to the lower time frame and look for entry at this place. Let me mark a box. Let me mark a box right there. So that's what we for entry. But it seems the entry that happened here was failed. Our price went up to, once it fell, the first swing high taken is failed. You wait for another swing point to be taken. Okay. So I zoomed my list and I saw that there's a swing point here in the previous listing. So I marked it out. Okay. So I went down again to my what entry time frame to know if another setup will be formed at this point. And it did, and actually delivered. Now let's go. Let's see the time that it actually executes. Let me check the time that setup is executed. So just the same narrative, guys, the same narrative. So once you see any of the template, those templates I posted on the screen, so that is what you'll be looking out for. Exactly the same templates, okay? You don't need to complicate it. It must be a quick shift in market structure, then return to FVG. So now you can see this one now. So this entry was in 3 minutes, okay? This particular entry was in 3 minutes. Okay, it was in 3 minutes. That's a stopwatch. Let me show you guys 3 minutes before I go to the other one. So this first one, this was the entry in 3 minutes, guys. Okay, you can see the entry. Let me remove this yellow box. I just for identification sake. So now there was an entry right there, a little FVG. So it is the same thing, the same narrative, the same model. Okay, you can see it. This so this is the second model, right? Second sell model. Then return to this FVG and it sold. Okay, so this was the model right there. Okay, so market structure shift. After the market structure shift, is there this thing? Yes. Is there an entry, an FVG? Yes. So that was our target. Okay, so let me zoom this. So my listing should be here. I just did it. So once it is there, then my stop loss will be here at this high. That is this high particular, this high here. Okay, that's where it should be. But I will add extra 1 pip. So it was 4.3 pips. I'll make it to be 5.3. Beautiful. So I made it 5.3. Then what is my target? My target is number one, this low. Is it up to 1:3R? No. So I will expand it, look for another low here. You can see another low here. So that's where I will target. I'll target, is it up to this? No. So I'll target another low. Okay. So this is how I check it. So I target another low. So this low now gives me 1:3R. Okay. So maybe probably once this low is taken, I can protect my trade while it actually delivers. Okay. So that's it, guys. And this trade fucked up and it hit our stop loss. We still waited for another swing high to be taken. So another swing high was taken. That is this thing from the past data. Okay, so we waited and you can see this one. This execution was in 1 minute. The entry was in 1 minute. Okay, it was very, very clean shift in market structure, return to FVG for entry. As simple as that. So guys, that's it. Very simple, very simple. Keeping it very simple, guys. Keeping it simple, guys. And you execute like robot. You see how far this model, like, okay, if you have back tested it, I want you to come back to this video and actually commented how it's going. Okay, if you are profitable with it, no matter any pair you trade. But personally, I use Euro USD. I only trade this setup on Euro USD. So right here you can see another one after the stopwatch was taken. So there is price. Any entry here, there's no entry until this point. A quick shift in market structure. Any gap created, yes, there was a gap created. So I used the second gap at the up. So it was a very quick entry. Okay, so after this thing, so I placed my entry at the opening of the gap, then put my stop loss definitely will be at this high, that I will add extra 1 pip as always, 3.6, then I'll make it 4.6. Right, so once it is 4.6, why? Because of buffer, I'll be targeting this low here. Okay, then my first target is 1:3R. Okay, I'll just target this low, but it didn't reach 1:3R. I targeted this second low, and that's where I take profits. That is about 3.3R. Okay, remember I trade in percentage. I don't even check my. I only use my pip to calculate my my risk. Okay, but I don't. I look at risk. Once you calculate your risk, predetermine how much you're willing to risk. Okay, using the position sizing calculator, then you can simply use your lot size. Okay. Okay, once the pip is smaller, your risk pip is smaller, they definitely means it will give you high lot size to execute. It is the lot size now that determines how much you make. Okay, so you don't need to look at how many pips it delivers. What matters is how much you make and how much you lose. Okay, that's what that matters. Okay, so that is it, guys. This is a sell model template, and you have seen how it delivers. You see, most of the time this setup delivers. Okay, you can see a lot of it. I have a lot on my chart, a lot of the setup on my chart. Okay, that's the old execution. You can see it here. So, but just know that it doesn't have 100% rate, but at least it used to give me some weeks to give you 100% rate, some weeks to give you 80, some weeks 60, some weeks 70. Okay, depending on how the week delivers. But most of the time, it will always be above 50% win rate in all the weeks. Okay, so your work is just to execute. You spot the setup, back test it, then you fund your account and try it out. Let's see how it goes, guys, and come back to this video and give me your research. Okay, so now currently it is 12 a.m. already. It is 2 a.m. Sorry, it is 7 a.m. for New York time currently. So now, so I'll be looking for a setup now, right? Because morning setup fucked up, right? I'm still bullish. I want to buy today. I want to buy. Why do I want to buy? That will be another video from that day. Okay. So I'm expecting, you can see it's going down. So I'm expecting this low to be taken. If this low now is taken, this low is taken now. I say stopwatch. Then I will then go to my 15 minutes and look for entry. Then I'll take it to the upside, then target this side and also this side. So that is it, guys. So if you have learned a lot from this video, all right, just like the video, right? Okay, so that's it. It's very simple. This strategy has high win rate and is going to change the trading game for you. So all right, guys.
That is it. So the main thing is to stick to the rules. Okay, you must stick to the time. So this setup must form at this particular time, okay? That is from London Q zone, it must form between 2 a.m. to 5 a.m. So once the time have closed, you don't look out for it. You wait for New York Q zone, that is 7 a.m. to 10 a.m. New York time. Okay, so that's it. You look out for this to set up. See, very simple. You consider time number 2. You look out for a swing point to be taken, okay, in 15 minutes. If it is a swing high that is first taken, then you go to your lower time frame and look out for this setup. Okay, then you wait for a shift in market structure, then return to a gap for your entry. Okay, which I showed you guys 2 concepts which you can use to look out for the entry. Okay, so maybe I'm going to post a slide of my the model template, okay, so that you'll be able to understand this better. Okay, so it's very simple, guys. Just stick to the rules, then backtest to actually see if this setup works. Okay, so if you have learned a lot, please comment. Maybe if you have any topic you want me to talk about too related to ICT, you just comment too, okay, so that I will make a video about that. I hope you learned a lot from this YouTube video. Please, if you are new to this channel, please do well to subscribe. Okay, do well to subscribe for your boy, and also like the video, right, so that YouTube algorithm can actually take it to other people that actually need this. Okay, so I wish you all good luck and bye for now.